With Donald Trump set to be inaugurated as the 47th U.S. president today, certain sectors are anticipated to benefit from his administration's policies. Investors might consider the following 5 exchange-traded funds, or ETFs, that are positioned to perform well under the new administration. Historically, new administrations bring shifts in economic policies that can significantly impact various sectors. Experts predict that Trump's focus on deregulation, tax cuts, and infrastructure spending could boost industries like finance, construction, and manufacturing. By examining historical data and expert opinions, we can identify ETFs that are likely to thrive in this new political landscape. Please like, subscribe, and hit the notification bell. Also, explore the links in the description for more information. Don't forget to check out our Kindle book, Get Rich by Investing, in the description below. It's a must-have for all investors and helps support our work. Trump's focus on deregulation, particularly in the financial sector, is expected to create a more favorable environment for banks. The SPDR S&P Bank ETF, known as KBE, offers equal weight exposure to a broad range of banking stocks. Historically, KBE has shown strong performance during periods of economic growth. Key holdings include major regional and diversified banks. Experts believe that under Trump's administration, with a focus on deregulation, KBE could see significant gains. With an emphasis on energy independence and the expansion of fossil fuels, the energy sector stands to gain. XLE provides exposure to a wide array of energy companies, including those involved in oil, gas, and consumable fuels. Historically, the energy sector has seen significant volatility influenced by policy changes and global market dynamics. Experts suggest that potential policy shifts under the new administration could impact the performance of XLE, especially with a focus on renewable energy. Investors should keep an eye on these developments to gauge the ETF's future trajectory. Increased defense spending is a hallmark of Trump's policy agenda. The iShares U.S. Aerospace and Defense ETF, or ITA, focuses on companies engaged in the manufacturing of aerospace and defense equipment. This ETF includes key holdings such as Boeing, Lockheed Martin, and Raytheon Technologies. Historically, ITA has shown strong performance, particularly during periods of increased defense budgets. Experts believe that with Trump's focus on defense, ITA could see significant growth due to higher government contracts and spending. Trump's administration has signaled a friendlier stance toward cryptocurrencies, aiming to position the United States as a leader in the crypto space. The First Trust Skybridge Crypto Industry and Digital Economy ETF, or CRPT, invests in companies driving innovation in the cryptocurrency and digital economy sectors. The current state of the cryptocurrency market is marked by volatility, but also significant growth potential. Experts believe that potential regulatory changes could provide more stability and attract institutional investors. Historical data shows that despite fluctuations, the long-term trend for cryptocurrencies has been upward. Analysts suggest that CRPT's performance could benefit from these trends, especially if regulatory frameworks become more favorable. According to industry experts, the ETF's focus on companies at the forefront of crypto innovation positions it well to capitalize on future market developments. With plans to prioritize American manufacturing, this ETF targets companies that stand to benefit from the movement of manufacturing back to U.S. shores. The Team American Reshoring ETF or RSHO, spans sectors like industrials, transport, and semiconductors. NASDAQ. Key holdings include major players like Intel, Caterpillar, and Union Pacific. Historically, RSHO has shown strong performance, especially during periods of increased focus on domestic production. Experts believe that reshoring policies could further boost these sectors, making RSHO a promising investment. Let's now explore other ETFs that might benefit from Trump's policies. First, we have the Global X-US Infrastructure Development ETF, or PAVE. This ETF targets companies involved in the construction and engineering sectors, which are likely to see increased demand due to Trump's focus on infrastructure development. Key holdings include Nucor, United Rentals, and Jacobs Engineering. GAP2's experts suggest that infrastructure investments could stimulate economic growth and provide long-term benefits for these companies. Next, let's shift our focus to healthcare. The iShares U.S. Healthcare Providers ETF, or IHF, stands out. This ETF includes companies like United Health Group, Anthem, and Humana. GAP2's. Trump's policies may aim to reduce regulatory burdens and increase competition in the healthcare sector, potentially driving growth for these providers. Analysts believe that the focus on lowering drug prices and expanding access to healthcare services could benefit these companies in the long run. Finally, we have the Technology Select Sector SPDR Fund, or XLK. This ETF includes tech giants like Apple, Microsoft, and Alphabet. GAP2's. With Trump's emphasis on advancing American technological innovation and protecting intellectual property, the technology sector could see substantial growth. Experts predict that policies supporting research and development, along with tax incentives for tech companies, may boost the performance of XLK. By considering these ETFs, investors can strategically position themselves to capitalize on the potential benefits of Trump's policy directions in infrastructure, healthcare, and technology. While the potential rewards of investing in ETFs aligned with Trump's policies are compelling, it's crucial to consider the associated risks. Experts caution that political and economic uncertainties can create volatility in the market. GAP2's. For instance, infrastructure projects may face delays due to bureaucratic hurdles, impacting ETFs like PAVE. Historical data indicates that while infrastructure investments can stimulate growth, they often require significant time to materialize. GAP2's. In the healthcare sector, regulatory changes could lead to unexpected consequences. For ETFs like IHF, shifts in policy might initially boost growth, but could also lead to increased competition, squeezing profit margins. GAP2's. Analysts highlight that the healthcare sector has historically been sensitive to policy changes, and investors should be prepared for fluctuations. As for the technology sector, represented by XLK, the rewards could be substantial, but so are the risks. Trade tensions and changes in intellectual property laws could impact tech giants. GAP2's. Historically, the tech sector has shown resilience, but it's also prone to rapid shifts in investor sentiment. Experts suggest that while the potential for growth is high, investors should remain cautious and diversify their portfolios to mitigate risks. By weighing the potential rewards against the risks, investors can make more informed decisions when considering ETFs under Trump's administration. Diversifying your portfolio is essential for managing risk, especially in a volatile political and economic environment. Experts recommend spreading your investments across various sectors and asset classes to minimize exposure to any single risk factor. GAP2's. For instance, combined nakauns Combining ETFs like KBE in the banking sector with XLE in energy and ITA in aerospace can help balance your portfolio. Historical data shows that diversified portfolios tend to perform more consistently over time, reducing the impact of sector-specific downturns. Gap 2s. Financial advisors often suggest including a mix of domestic and international ETFs to further mitigate risk. By investing in global markets, you can take advantage of growth opportunities outside the U.S., buffering against domestic economic fluctuations. Gap 2s. Additionally, consider incorporating bond ETFs or other fixed income assets to provide stability during market turbulence. Bonds have historically acted as a counterbalance to equities, providing income and reducing overall portfolio volatility. Gap 2s. Experts also emphasize the importance of staying informed about policy changes and market trends. Regularly reviewing and adjusting your portfolio based on current events and economic forecasts can help you stay ahead of potential risks. Gap 2s. Finally, consult with a financial advisor to tailor your investment strategy to your individual risk tolerance and financial goals. By following these practical steps, you can better navigate the complexities of ETF investing under Trump's administration. As we look to the future, understanding the long-term outlook for ETFs under Trump's administration and beyond is crucial for making informed investment decisions. Gap 2s. Experts suggest that Trump's pro-business policies could continue to benefit certain sectors, particularly those tied to infrastructure, defense, and energy. Historical data from his previous term shows substantial growth in these areas, which may persist if similar policies are enacted. Gap 2s. However, it's essential to consider the broader economic landscape and potential policy shifts. Analysts warn that geopolitical tensions and trade policies could introduce volatility, impacting global markets and ETFs. Gap 2s. Diversification remains a key strategy, as it can help mitigate the risks associated with political and economic uncertainties. Long-term investors should also stay attuned to emerging trends and technologies that could shape the future market landscape. Gap 2s. For instance, advancements in renewable energy and digital currencies might present new investment opportunities, regardless of the current administration's stance. Financial experts recommend maintaining a flexible investment approach, ready to adjust as new information becomes available. Gap 2s. By leveraging historical data, expert opinions, and a well-diversified portfolio, investors can better navigate the evolving market conditions. Ultimately, staying informed and adaptable will be key to achieving long-term success in ETF investments. These ETFs align with the anticipated policy directions of the incoming administration, offering investors potential opportunities in sectors poised for growth. Don't forget to like, subscribe, and hit the notification bell. Check out the links in the description for more information. Also, consider purchasing our Kindle book, Get Rich by Investing, a must-have for all investors. And your support helps us create more valuable content